and now it's time to connect with Devang Mehta, who is joining us on the show right now. Hi Devang, good to be speaking with you, and welcome to ET Now. First up, help us with your take on the markets, Devang, because of late, very volatile times coming in for the markets, but Indian markets are showing stellar resilience at this point in time, though the global uncertainties still prevail. But how do you see the market mood, Devang? Is the glass half full with respect to the growth outlook for the Indian markets or Indian economy rather, or half empty, that the earnings subduedness or rather the weakness in the earnings, the tariff uncertainty will trickle in some time from now?
Hi, Srishti. Good afternoon. Thanks for having me on the show. I think very clearly it's been a spectacular rally amongst the uncertainty or volatility, however you may put it. But I think the lows in this April were somewhere around April 7, if I'm not mistaken, some 22,100 levels, which the market touched. From there on, there has been a 7% type of a rally on the benchmark indices, and there's also been that type of a push also on a lot of mid cap, small cap indices. My sense that people have started to now list down the positives. I think the last 4 5 months since September, when we made a market top, I think from that there on, I think most of the negatives now seem to be priced in. So we know that it started in the second phase with the Trump tariff tantrums. I think the global arena also came and disturbed us. I think our macros were starting to improve come the last quarter of the financial year. We saw a good set of GDP data which bounced back. We're also seeing lower inflation and accommodative stance by RBI. Already 2 rate cuts, a good liquidity being infused into the system. We are also seeing a couple of rate cuts more during this calendar year. I think if most of this are super positives that way, probably the monsoon forecast predictions, the early predictions show that we would probably be above average monsoon this year. I think yes, the missing link right now, and then the most important part which a market would like to see in market is the slave of earnings, right? So markets wants to now see earnings coming in. We had a P upgradation earlier. We have P downgradation also has happened. So probably at this price points, at this valuations, I think the most crucial aspect is earnings and cash flows. I'm very sure. I think this quarter there'll be certain sectors like IT which are facing the pressure, the brunt of the global connectivity it has. I think some domestic sectors will come out with good set of numbers, and I think the most important is guidance and commentary for the management for the coming year. So I think I'm not at this point feeling any way bearish. I think it's a good time. One should go back to the drawing table, start sort of valuing businesses again, and start evaluating those and sort of looking to buy them in the portfolio, accumulate them in the portfolio for the next couple of months in this result season.
Devang, hi, thanks so much for joining us, and thanks for that view as well. This is Snehi also joining in. You did say that some domestic facing sectors could turn out to be winners in this earnings season. So for the upcoming earnings season, tell us where you are seeing some pockets of safety or some safety nets in the market right now, given that we've started with IT, but so far 2 of these big IT companies have reported rather mixed set of numbers, inline numbers, and the guidance has been rather shaky. That's the case at least been for Wipro. So what's your outlook when it comes to the earnings season this time, and where do you think there could be some pockets of safety?
I think, see, there are 2 aspects to it. One, you probably want want to hunt for the flight to safety. Yes, there can be companies in the universe of discretionary and even certain non-discretionary consumption companies which sort of have not worked during the entire market cycle when it was sort of going up. Second is also the BFSI related companies, a lot of banks which have now come back to the fore. There are a lot of companies related to companies in depositories, in exchanges, where financialization is taking off as well. These are certain pockets which offer you one safety as well as capital growth over a period as well. The second aspect is IT. Yes, we have been sort of, I think, underweight, or the word is that we have generally been negative more on IT. We know that it has global connectivity. I think a lot of companies in even the metal universe, we know that we are price takers, and there will be a lot of volatility across when there is US, when there is China, so many equations, so many moving parts. So I think anything that has to do with global linkages would be a difficult thing to absorb in the portfolio at this point. But something which has domestic sort of appeal, for example, as I said, discretionary consumption. The second being capex oriented sectors, infrastructure, maybe cement. These companies had corrected big time. Capital good companies companies in the power sector, automation sector. I think we have seen decent amount of correction, price correction, valuation correction in these companies. These are the pockets I think one should sort of look at. As I always say, it is more of capex, a bit of credit growth, and a bit of consumption. These are the type of I think themes which one should probably start and hunt in the markets.
The thing that is boding well for the Indian markets is the turnout of the FII investors. They are once again seeing the equity markets off late. In the cash segment, we are seeing positive numbers. Financials is one space where they have the most of the exposure, and that indeed is turning out the story in a similar fashion. Nifty Bank is not very far from its all-time high levels. But other than financials, Devang, which sectors do you believe maybe it's time to look out for with respect to the FII positioning, which could be critical at this point?
Important question, Srishti. In fact, as we always know that when the FIIs come back with the bank, whenever they come, this is just the preview or the trailer, which we don't know whether it will last or whether it will probably just erode in a couple of weeks. But most importantly, whenever they do come with a bit of more vengeance, they first come into financials, they first come into the index type of businesses. But I think this time around, there are a lot of new sectors which have come to the fore. As I said, India had a missing capex cycle since 2012-13 to around say 2021-22, which probably now with government capex being happening for the last 3, 4, 5 years, and also private sector we are hearing are probably at the verge of expansion. Also with rural and urban consumption improving a bit, there are a lot of discretionary consumption, travel related things, hotels. I think these are pools where the profits are shifting from the traditional businesses as well. My sense is that FIIs, whenever they come back, they are also going to look at this type of infrastructure type of creation. India has always been a consumption type of market. I think for the first time we are looking at maybe investment, consumption, infrastructure. I think all such themes can come back to the fore. There are data centers, there are, as I said, companies in the power universe, companies in the renewable energy space, and all these are maybe at this point, if we can club it or you can term it, these are mid-cap ideas. But over a period, there is a potential of these mid-cap ideas to grow into larger caps over a period. So I sense that somehow, yes, FIIs would come into the traditional Nifty type of businesses, but then that would spread out into a host of 100, 200 ideas.
And Devang, also want to get your view on everything that's been happening around tariffs. To what extent do you see India standing to gain from the tariff war and the negotiations that are currently taking place between the US and China? What sectors that are external facing for India stand to gain? For example, semiconductors. Now that China is under immense pressure, and also from the Asian markets, I believe India is the country where Trump has not put a lot of tariff compared to your other countries. Would that also be another, let's say, tailwind for FIIs to make a comeback?
It is very clear that India emerges as a strong nation. I think we probably would see more growth than anywhere else, at least in the emerging market pack. And we know that now, probably with this era, India has generally been neutral to sort of talk about the tariff hikes as well. I think most importantly, India has a lesser sort of export relationship with US, which augurs well during such times. But over a period, I think the theme, as everybody talked about 3-4 years back, something like a China plus one, or some manufacturing getting shifted to India, maybe a bit of trade relationship growing with the developed world. I think these all are factors which India is capable of. India has traditionally been back office to the world. If probably India now tries and become a partial factory to the world, I think that also augurs very positively. So my sense, yes, India tends to benefit from once the dust, I think India will be emerging as an extremely strong growth nation in terms of not only economy, but in terms of capital markets as well.
Devang, with this, we let you go on that note. Really appreciate you taking the time out and speaking with us and giving us a sense that how do you see the markets at this point in time.
If you like this video, then like, share and subscribe to ET Now.